Yo, what's up you guys, welcome back to a new video. And today's video we are going to take a look at the USD CPI data that got released, how it's going to impact the market from a fundamental perspective. We're also going to take a look at gold as well as the NASDAQ, Dow Jones, Euro USD and the dollar index from a technical perspective there as well. Now, without any further ado, let's jump straight into the information. Firstly, we can see here that the CPI data came through at 0.1%, which is lower than the markets anticipated, and that's for the CPI month over month, and obviously year over year had dropped to 5%. Core CPI also came down to 0.4% there as well. We're obviously waiting for the FOMC minutes to hear what Powell is going to be speaking about, or what he is going to say, and what we can expect about the outlook in terms of interest rate decisions. But obviously, as you know, if you've been here long on the channel, you know that when CPI data comes through lower, it is an indication that the Feds are less likely to be as aggressive with the interest rate hikes. Now, the market has been baffling us up and down with the fundamental data. The last time we spoke, you know, the anticipation was for the index to increase in value, based off the I almost said based off the valuation, but based off the last fundamental information that we received, we obviously anticipated the Feds to go and hike interest rates higher. But then again, the Feds are due to address the nation. I was going to say the nation. Let me just see if I can change this. There we go. So the Feds are coming through at 8 o'clock tonight. They're going to speak a little, and we obviously need to hear what they have to say there as well. But as it stands now, the Feds are less likely to be as aggressive with the interest rate hikes. So once again, I do expect a correction, and then for the dollar index to continue that clearance move to the downside. The first article we got over here is from CNBC. It reads that the inflation rises just 0.1% in March and 5% from a year ago as the Fed's rate hikes takes a hold. Now, what that basically means is that they're telling us that the Feds are most likely to hold off with the interest rate hikes, and because of this, you obviously expect a weaker dollar, because this means consumers get less impacted, and they will just go out there to spend more money. This means gold prices increases, indices as the NASDAQ, Dow Jones and the S&P 500 are likely to increase in value. The dollar will weaken, and every currency trading against the dollar will also increase in value there as well. Just to go through the key points, it says here the CPI rose 0.1% in March, month over month, and 5% year over year. Below estimates. It says here, excluding food and energy, core CPI accelerated from 0.4 to 5.6%. Both went as expected. Energy costs fell and food prices were flat. Used vehicle prices also declined. A 0.6% increase in shelter cost was the smallest gain since November, but still resulted in prices rising 8.2% on an annual basis. Now, does this mean things are going to get easy for US citizens? Well, we do not know. It is not easy to kind of dictate or to predict whether or not this is what we are going to get. You don't know. It's like making decisions in the market. You don't know if you should always go with what your what your future outlook should be, but we have to be, like I always say, we have to be reactive and not predictive, and we learn to adapt there as well. Let's just go over here. Just see this one just came up here now. It says your stocks give up earlier gains, turn negative as inflation concerns lingers. Let's go through this. This is very interesting. It says your stocks fell on Wednesday, giving up early gains as worries over US inflation persisted even after the release of cooler than expected data. Now, this is what I'm talking about. You see, it's such a confusing situation that's going on in the market, right? Based off pure fundamental data in line with technical information, when CPI data drops, it just means that the Feds has got everything under control, right? There's no reason to be as aggressive with interest rate hikes. That thus then lead to a weaker dollar index, and then all of a sudden, boom, news comes out again. It says here, stocks fell again. Okay, even after release. So you guys understand why it's not that easy to trade. You see why you should not be in the market. On the one side, the inflation data came through cooler, but they are saying that even after cooler than expected data, the stock market still took a drop, which is what I was going to be speaking about, especially with the start on the NASDAQ, which I've done the breakdown, and we could see we got this potential pullback there as well. But this, again, it's just a correction. So let's continue and not get out of hand over here. Also, an article on gold. It says your gold charges higher as the Fed bets for pause gains, as bets for Fed pause gain ground. Now, just going down here, it says gold accelerated over 1% on Wednesday as signs of cooling inflation added folder for bets in the placard now in a pause for interest rate hikes there as well. Well, we got the Feds coming through. We've got PPI, unemployment claims, we got retail sales. Busy week in the market this week, which is one of the reasons why I've not taken a single trade this week, because sometimes you can, not every day is a day to trade, but I understand that there's a lot of people that needs to be in the market on a daily basis. Unfortunately, I'm just not one of those people there as well. So we're going to start with the dollar index as we expect a correction to take place. Now, the dollar index starting on the monthly time frame. Clearly, the market, as we can see over here, the market is currently trading at support, but we know the market has still got a very much room to the downside, and I do expect the market to go and at least go and hit this wick that it created here. So about that, that's not the icon that I was looking for, it's this one over here. And I don't expect the index to clear more to the downside, but I don't expect the index to just clear more to the downside. I do expect a daily correction and then a continuation to the downside. As you guys obviously know by now, the market moves in waves. It creates an impulse correction and then obviously an impulse pattern. If you go around on the weekly time frame, what do we have over here? Now, from a weekly perspective, this is a very nice place to buy, right? It looks like the best place to buy, right? Because support. But again, like I said, I do expect a correction first, and we can see here we've got a weekly impulse. After that, we expect a correction to at least 0.382, and the way you measure this is by taking your Fibonacci from the first red candle, because that's where the impulse started. Then you move it down to the last or the lowest red candle in this move to the downside. Now we can see here that we have the 0.382 sitting at that level, which is more or less where we expect a pullback to before a continuation to the downside there as well. Now on the daily time frame, what can we see? Now from a daily perspective, again, we can see we have this market creating an equal low. However, we have the structure that the market had just broken below. This level over here acted as a level of support. The market broke below support, came back to test it as resistance. Resistance did not hold. The market, by definition, I thought was going to create an inverted head and shoulders pattern. Unfortunately, the level did not hold. Now, all of that support is now once again turned resistance. I do expect the market to continue slightly higher, hit that level, and then continue this move to the downside. Market also printed an impulse. Again, if you take your Fibonacci from the high to the low, you can see that we do have the confluence of the 61.8. It's lining up perfectly with that previous level of support that is now turned resistance there as well. Next up, what do we have? We've got the NASDAQ. Now, the NASDAQ, again, I do expect the NASDAQ now to start this clearance to the upside with a deeper retracement. That would probably where I would love to see it, but I'm going to bet on that level over there because they can bet. The Feds bet, so I'm also going to bet. However, I do expect this index to just give us a deeper pullback potentially. Let's see where we are now. Taking that Fibonacci, yeah, I do expect a deeper pullback to at least potentially to the 61.8. Just be very careful that if we do get a break above this level, because as you guys just saw now, we are testing, well, we have tested previous resistance. We also had a gap that the market had filled. Now there's obviously two ways to approach this, because why, you know, these markets, they tend to, these things, they change overnight. Tonight you can go sleep and then there's new news coming out, out of nowhere. The Feds could potentially come through by the time I publish this video also, and they could potentially move the market there as well. Next up, we've got the Dow Jones. Now the Dow Jones, again, has got some clearance here to the upside. Again, the market had broken above a very important structure, and this is ideally the level that I would like to see the market come and hit. So I do expect Dow Jones to go slightly deeper and then continue this move to the upside. Next online, we've got GBP USD. Now GBP USD, if you go on the monthly time frame, I still remember when the market was trading at this level over here. Like, I think it was here. I think it was here. Somewhere there. Like I just remember it. We were getting into some buys, or in fact, let me not say we, I'm just gonna say me. I was getting into some buys, anticipating the market to, obviously, like, you can go back to the breakdown that I did when the market was at this level, explain all of that, the reasons for the move to the upside. This would have been a nice swing. Unfortunately, depending on which prop firm you were with, they'd probably not pay you, because if you had to hold the trade for that long, you would have probably breached the 50% rule, right? Because you can't have a trade that's more than 50% of the amount that you would withdraw. So if you put in a trade at this bottom, and it was probably running at like $20,000, in order for you to get that withdrawal, you need to have made the $44,001. Okay, but that's a conversation for another day. Next up, we have a GBP USD over here, right? What we can see is the market is currently breaking above resistance and trading at support. Again, I do expect a slight correction here as well before that move to the upside. Clearance is expected once again to this level there. Market has given us a clear confirmation that it's ready to move to the upside by breaking above this level of resistance. On the daily time frame, what do we have here? Let's see. Okay, on the daily. Now here we go. So the price action looks very beautiful over here. Firstly, we can see the market had broken above this strong level of resistance. However, the market also printed an impulse to the downside, broken above resistance, tested it as support. If you take your Fibonacci from the high to the low, we've got the 61.8 pullback as we anticipated there as well. But I do expect a correction on here, not a correction, but a move to the downside for the market to go, and at least I'll tell you now, probably still there. Okay, so this is where I expect a pullback on GBP USD. Again, if anything changes, I'll give you guys an update there as well. And then last but not least, we have to speak about gold. The prices of gold has been increasing so much. If you do live in Durban, I know people in Durban love gold. They probably have made a lot of money. So next up, we've got gold over here. Now gold has obviously got room for clearance to the upside. Now gold again, had printed this move during the pandemic, and we can see the market is once again heading for that level. Hopefully this time it will break through it, setting the dollar into a recession. So at least see and try if you can get in this move, potentially a long swing. But then again, just be careful, because it is so difficult to trade, like with certain prop firms nowadays, because of all these rules that they have in place, which kind of prevents you from making too much money. Also, we've got the gold broke above resistance, came back to test it as support, and this is on the weekly time frame, so we do expect a continuation to the upside. Next up, we go on the daily time frame. What do we have here? So here on the daily time frame, you can see we've got similar price action here. We have an impulse to the downside, market printed an equal high, and we also have a level of support that we will be faced with here, and a level of resistance. There's two ways to trade gold, and I'll tell you why I've got these two ways, and not just basically one way like everything else, right? That's because gold used to be currency correlated in the past. What that means is gold used to be we used to hedge against gold due to an increase in the dollar index. But now you don't know if gold is inflation, if gold is So what I'm saying is that most of you probably have realized that sometimes gold and the index move in the same direction, and sometimes we can see gold has been moving quite aggressively to the upside. The index has been very weak to the downside, but sometimes you will notice that gold will move up and the index will move up, which is obviously just a short-term move for the index, right? So this is basically how we are going to approach it. You're more than happy to wait for that. Now I know a lot of you don't like to wait. You're more than happy to just go in there, and also please just make sure that you calculate your risk accordingly. In any case, so yeah, so like I was saying, it's just important that when you do select a prop firm to trade with, that you must obviously understand the rules and regulations that goes with it, because it is the most difficult thing to do, because you need to be focused on so many things at the same time. You need to be focused on a 50% rule, a consistency rule, not being able to trade 5 minutes before news, or not having to keep trades over the weekend. You have all of these things that you need to consider. So before you invest your hard-earned money into any prop firm, thinking it is okay to just invest your money, think about it logically first. Then if you know you can't trade, then don't buy a funded account. Just learn how to trade. Okay, go learn. In fact, not learn how to trade, learn how to manage your risk and learn how to deal with your emotions also at the end of the day. Guys, that is it from my side. Have a beautiful evening further, and good luck with the trading for the rest of the week. I will see you in the next video, which is going to take place on Friday. Thank you for your time, and as always, cheers for years.